Hi, welcome back to today's episode of the Wealth Builders podcast. We have Kev Cahill as a personal finance content creator. Thank you very much for coming on today.
Yeah, thanks for having me. Happy to be here.
Can you give a quick kind of background and tell us a bit about your experience kind of getting into the personal finance space and starting how you started getting into investing as well?
Yeah, for sure. So you mentioned personal finance sort of content creator. That's probably newer experience, really. I've only kind of been making content for the last year and a half. And before that, I kind of came like the typical route that a lot of people do straight out of like university, into grad program. Did the grad program at a Swiss investment bank for 2 years, and then moved into the wealth management division. So that's where a lot of like my typical experience kind of came from. So I was working alongside the client relationship managers to help provide what the clients need basically to manage their money properly. But I think for the most part, with that sort of work, well, firstly, it was very like corporate, but also you're talking about like you're like Roger Federers and millionaires and billionaires sort of things. So I think I just kind of wanted to transition more to like trying out the entrepreneurship side of things, but also like helping people actually get to that stage rather than just helping the people that already have like crazy amounts of money.
Yeah. How did you get into that wealth management and what was it that finally like made you decide that you wanted to try something on your own rather than kind of being in the corporate life?
Yeah, so weirdly enough, like I think I rolled off the graduate program in the same company, and then it was just a case of like you did interviews internally to see what kind of team you go into, and I think I was just a bit more interested by the wealth management side, and so it was kind of by chance, kind of, and also to be fair, one point for people that maybe are like considering that line of work or want to get jobs in that industry, like a lot of it was just like casual networking. Like there was someone that I'm just friendly with who happened to work in that team. And when he was leaving the team, they needed someone to come in, and I was able to kind of get that like front seat when it came to like interviews. So that's probably how I got into it. And then it's not that I didn't enjoy it because I did, but the whole corporate side of things, it does get a bit stressful at times. And I've always kind of liked traveling, so I think it was kind of a gradual progression from like wanting to leave and not really knowing what to do, to kind of just wanting to take a break. Like I actually before COVID, I took I kind of just left my role and decided I was going to take some time out and like travel for a bit. So I went traveling for 6 months, like right before COVID happened, and then had to come back because of that. So I ended up back in the bank, and then after another 2 years, then I was like, okay, I think a break is needed again. So I just decided I don't know where the entrepreneurship thing came from, to be honest. I just kind of like think I just put up like an Instagram poll one day and was like, "Oh, do you understand like these basic financial concepts?" And like the results were like shocking and people were really showing loads of interest. So I was like, okay, maybe I can try and do something here that actually helps people, but also live life a little bit more on my own terms, I guess.
Yeah, although you were like working with people who are a bit more higher net worth, was there like mistakes and things you were seeing which you've kind of been able to transfer into like your content, which is a bit more tailored towards like the average person? Like what were the kind of big financial mistakes that you see people making, and like how could you help advise people to improve their kind of financial situation?
Well, funnily enough, like To be honest, the difference is steep. Like a lot of the time, the sort of mistakes that you see these people make is not that doesn't really correlate to like your average person, you know. Um, and also because like a lot of the time with these banks, like they're allocating a huge amount of their money to be managed entirely by the bank. So like the decisions aren't really even too much on them. They're kind of like influenced or advised on their decisions and where to put their money, but you don't really see them making like too much mistakes in that sense. Um, in terms of like what I help people with now and common like things that I see is like a lot of that came from my own experience, like alongside working in the bank. So obviously I would have been investing myself from like several years ago. I think actually one thing that I see a lot of people do, that I would have done myself probably, is that like when I first started investing, it was in probably like 2017, and because there was Bitcoin and the likes were having their first crazy pump at that point. So I was like, okay, I don't know what this is, but let me try and you know catch this wave sort of thing. Uh, so like naturally lost some money along the way, got some money along the way, but I think my mistake was probably just jumping in to an investment because of the hype and not really having any idea what I was actually investing in or what I was investing for. So like that's one thing I would say is, and I see it a lot with clients, is they try and get involved in investing and they invest in cryptocurrency as their first ever investment, not even understanding like the concept of it, and like it goes terribly and they stop investing. It actually frustrates me because like you don't like jump in the swimming pool at the deep end when you can't swim, you know? It's like it's the
Yeah.
same sort of thing. Like you're starting from one of the more complicated, riskier things,
Yeah,
and then you're giving up.
why do you think that is that people are choosing like the highest risk thing first? Is that because maybe people are being influenced to get rich quick, or being sold something that maybe they've seen other people achieve like a high return and they think it's possible for everyone?
Yeah, like I think it's a combination of things. Definitely the get rich quick element. That's one thing that like I feel like it'll just never go away. People are always going to want to get rich quick no matter what you tell them. Like I try and get people to understand that like long term like wealth preservation and growth is like the way to go, just because you can try and get rich quick, but you probably end up losing it quick as well. And also I'd rather get rich for certain rather than, you know, potentially get rich quick and maybe lose it along the way. And also, I think social media naturally is a big thing, especially for younger people. You know, you see the likes of, I don't even know, people like Jake Paul and people like that investing and making millions like out of nowhere sort of thing. And there's all these meme coins and people are becoming millionaires overnight. But like, who do you know that? Do you know that's done that? You know, like I think people fall into the social media side and potentially just FOMO, I guess, the fear of missing out on on that next big thing, you know.
Yeah, when it comes to like understanding the basics of like personal finance and investing, why do you think it's so important to educate yourself, and why do you think it's not part of the education system? Is it something that people, do you think we should start educating people more on at a younger age, or is it something that people kind of have to take into your own hands to build the kind of foundations for managing your own money?
Yeah, like it's interesting because I was discussing this with someone recently. I can't remember who it was, but one thing that we were able to like agree on that like it seems to be like a cross global thing is that like finance and money management is just not taught properly in schools at all. And like I've been traveling obviously for the last like 9 or 10 months, and like everywhere I've been, like a lot of the places naturally, like the schooling systems aren't that great because it might not be a fully developed country. But of all the developed countries, like it's just unheard of that they would teach like money management and personal finance in schools. Um, do I think it should be taught more? Definitely. Like the only reason that I'm even able to do this as a business is because it's so lacking in schools, you know. Um, and I think I saw someone as well on Twitter the other day saying, you know, you're complaining about the lack of education in schools for personal finance, but if you just taught your children what they need to know about money, then this wouldn't be an issue. And like that just to me that doesn't make sense because like my parents would have tried to teach me basic financial and money management from like an early age, but it was like different times, you know. Like especially growing up in Ireland, it was like if you can save any bit of money you have and get a good job, like you know, that's all we want from you, you know. Whereas the investing side of things, like my mom, she literally has only started investing last year, and that's just because I've pushed her into it, you know.
Yeah, yeah. What do you think is like the key kind of principles of personal finance and money management that, especially during like times like now in the UK where we have high inflation, like what are the key things that people need to get their head around in terms of like saving, investing, budgeting, and how can they kind of start to implement them?
Um, so like to be honest, I like to keep this stuff like as simple as possible because that way anyone can kind of get things right. And like what I say is like before you even consider going about investing, you should be like focusing or trying to at least master like your investing like foundations, and that's just my term. That's what I call them. So like when I say that, I'm talking about budgeting, emergency funds, sinking funds, your credit, um, even insurance to some degree, but probably not for young people, in most cases. And yeah, you're probably your mindset as well as an investing foundation, which gets overlooked quite a lot, is like if you're gonna even consider investing, you need to at least have some principles or an idea of kind of how it's gonna go or what to expect ideally to begin with, just because you're gonna lose money at some point. It's just like inevitable really, even if it's like an unrealized loss. So just getting your kind of your mind right for that experience is important, I think.
Mm.
What
Yeah,
about you? What would you say are the key things that someone should kind of focus on before they start?
I think you mentioned about like I think if you can't manage like £1,000 or if you can't manage a small amount of money, then investing is probably not right yet. Especially if you maybe have some debt or if you don't have an emergency fund, then you're potentially going to have to take out the investments before you've had time to let them grow. So I think step one is understanding your expenses and how much money you can have left over at the end of each month, um, so you can start putting together something that can protect you from if you had to take the money out or if you were to lose your job or lose your income. So I think budgeting is like the number one thing you have to get right 100% because that tells you how much you have left over. What would you say is like the the best way to kind of set up a budget and manage it? How can people stick to it to a budget effectively?
So, like, I fully agree. First of all, like, if well, what you said about the money, if you have £1,000 and you can't even manage that correctly, or you just end up spending it, there's no point. Um, and like that will apply no matter how much money you're making. And I see it loads as well, even with people that make a lot more money, or maybe they're high income earners. Like they end up investing probably the same as someone who's making like the bare minimum, really, because they just don't manage their money well. And it's something that gets overlooked a lot. But in terms of the budgeting and keeping it like as straightforward as possible, like I think if you can make something just easy for yourself, then that's as like whatever way you decide to do that is good. But what I generally say to people is it doesn't need to be like a strenuous, painful process. You can just sit down once a month and like I offer like a free budget tracker. I'm sure loads of other people do online. All these finance guys will generally have some sort of resource there. Just fill out all your monthly expenses based on probably last month and then and whatever income you earn on a regular basis, and that'll give you generally an idea of your disposable income or what in theory you should have available at the end of the month. And then, to be honest, most people when they do that for the first time they get a shock because they see, okay, this is what I should have. And then they never do have that amount. So like I just tell people potentially work towards that, and if you can put that aside at the very beginning of the month so that you don't spend it, and then try and stick to those expenses, usually that is like a good place to start. And also it doesn't need to be like you're checking your budget every single day sort of thing. Like like that'll just get too painful and you'll end up dropping it. So I try and tell people even just put it in a folder, all this stuff, and at the end of the month, every month, make sure you go through it properly or just update it. It only needs to take 20, 30 minutes, but you'll see where you're going wrong every month and you can make adjustments from there. And even from a young age, if it's a small amount of money, if you make sure that you're doing something useful, like building an emergency fund with that disposable income, then it'll go a long way towards you in a short space of time.
Mm, yeah, I agree. Like, I think when once you kind of skim through your recent purchases, you'll realize that how much all of the small things add up. And like even like you buy when you're out, you buy lunch or you buy dinner, and then through the week, like suddenly you spent like 100, 200 on like things you don't even remember. There's like spending money on. So
I was gonna say, just like on that point, like if you don't have that much money to begin with and you're only starting out, like cutting back on the small things like that add up without you noticing, like that's the easiest way to like save money for it towards investing, because if you're not making enough money, the only really way to get more money is to cut back on their expenses.
yeah, yeah. What how can a budget kind of help people kind of start working towards their financial goals, and what do you think is important when it comes to setting a financial goal and working towards it in terms of like being able to invest X amount, or and then that will help you kind of get closer to financial freedom?
Yeah, so like with the budgeting, like and it doesn't matter like what level you're at really. Like the example I just used was someone who has a low income and can just earn a little bit extra money towards emergency fund or investing by just cutting back a little bit. But even if you're making like 10K a month, like if anything, the budgeting is even more important then, because that's where it's like it's hard to track basically. So I think how the budgeting kind of helps you get there. And like people do say, oh, like I'm not going to get rich or financially free through budgeting, which is a fair enough point. But you will definitely stay broke if you're not budgeting, because your money management is probably going to be terrible. Um, so like what I generally tell people is like, no matter where you're at, if you just do this monthly budget every month, it'll at least give you an idea of what you should have in terms of disposable income. And then after you've built up your emergency fund, that's when you can start allocating into your budget investments or goals that you want to achieve, and start allocating that disposable income at the start of the month towards those things. And like it may seem minor initially, putting a few hundred quid towards like an index fund or even just a random stock, but in it does compound over time, and that's where you'll start to get eventually towards a point where you can see if I achieve all of these goals that I have, that's where the financial freedom will eventually come from.
Mhm. Yeah, yeah. I think any financial goal should be smart in terms of like being actionable, being time bound, so you can track your progress as well. I think a lot of people as well don't have an idea in mind in terms of that financial freedom number, because I think if you're if you plan on retiring early, you need to have a idea of how much your expenses are going to be per year, so that you know that I have X amount invested, so I can draw down however much it needs to be per year. So
Yeah, it's true. Like I do see quite a lot of people use that like fire calculator sort of thing, like the financial independence, retire early, like matrix to see like how much they actually do need to kind of sustain their lifestyle, I suppose, when they retire. And like sometimes I get clients to fill out that for me so that they can just give themselves a bit of a shock in the beginning because they don't ever like think, the amount of money that they actually would need to retire at like a certain age. Um, but yeah, in terms of the goals and making them like actionable and like time bound, I think that's important. Like one thing nearly everyone I meet or speak to about finances, one thing they may have these lofty goals in mind, but there's not necessarily like a time they're planning on investing in a certain thing or even like set goals for set investments. Like can be easy if you think about like, oh, I want to have a house by this age and I want to live in, then like a LISA makes sense, a lifetime LISA makes sense for you probably. But then I'll have people that are investing in them because they know they're getting like 25% extra added from the government, but then they have no intention of like living in the property or anything. So it's like that's why you need to have goals for each investment, and you want to know where it's getting you or that it's getting you towards like your lifetime goals, I guess.
yeah, yeah, and we spoke about budgeting, how like you can cut back on expenses, but I think obviously being able to increase your income and like your earnings is also like there's more scale to it. Do you think that there are ways to kind of boost your income with maybe like you've been able you've kind of gone down like an entrepreneurial route? Like, is there a way people can maybe start a side hustle or ask for like a salary negotiation or look for different opportunities to kind of boost their income?
Yeah, and that's the thing, like with the budgeting, like if you're just starting out and you can't find any money to get together for any emergency fund or anything, that's when the budgeting will help you cut back expenses and things like that. But at a certain point, that's not going to make much more difference than you. I always tell people as well, if they're earning a certain amount of money, like we want you to enjoy life as well. Like you don't have to cut out every single every single luxury expense. You do need to have a bit of enjoyment as well, and that's when you do kind of want to look at like maybe increasing your income or setting up a business or something along those lines. Like one thing that I did myself is, I mentioned at the beginning that I went traveling for 6 months and then I went back to my previous role. Like it's a probably a bit of a unique situation, but like what happened there was I basically left the role completely and then I ended up going back as like a consultant. So I wasn't working for the company, but I went back, like technically wasn't working for the company, I was working externally. But I went from one role, 6 months later, came back to the exact same role, but because I was a consultant, it like tripled my salary. So, and like that was at like age 25. So I went from like 50, 45K to triple that basically in 6 months just by taking some time off. So like it's a bit of a unique situation, but like if you can work towards that, and a lot of companies will have that situation where they have contractors or consultants come in. If you were aiming to be like an expert in your area, that's like definitely a route you can go. Alternatively, um, like side hustles, I don't know about you, but when I was in university, like it never even occurred to me like to pick up an extra. business or extra hustle or whatever to make a bit of extra money. Like I wasn't doing nearly as much as I could have. Um, but I think with younger people nowadays, that's something I see a lot more is that actually people do kind of try and have a side hustle from earlier nowadays. And if you can, then definitely go for it. Like there's obviously the question mark of like burnout and things like that, but I mean everyone can manage an extra hour or two a day after like university or after their 9 to 5 even. Um, and you'd be surprised how far it can go. Like, do you have any side hustles yourself?
Yeah, I think obviously I used to work in an office in London before the pandemic. I used to spend
Mm,
all of my free time like commuting, but then once it got to like working from home, I had like all of this free time. I was like, what can I do with myself to kind of actually do something productive? So I started like creating content on Instagram, like theme pages, and then like obviously one of them I stuck with for 2.5 years, and it just blew up. So uh, that was like my main thing that I was kind of keeping up with every day, and never expected it to grow into something. But now, because I stuck with it for a long time, it's like so many opportunities now from having a big Instagram platform. So it was something that was free to start. Obviously, it took a lot of time investment, but like if you kind of stuck with it for a long time and stayed consistent, then start to see like results. So yeah,
that's one thing I think like people don't touch on at all is that like everyone talks about compound interest when it comes to like index funds or the S&P 500 or whatever else. But like small good decisions like that in your life that you take do compound as well. Like as you said, like even just putting in a bit of time consistently for a long time, and then it suddenly you've made something out of almost nothing, you know. Um, Even a non-investing example for myself is like I've been just doing Spanish on like Duolingo uh for like 1,000 days now. So it's like 5 minutes a day, every single day. And like you don't even notice 5 minutes. Like 5 minutes is just it does takes nothing out of my day, but like I'd already have like the basics of like the language just from that, just from being consistent with it over time, you know? And I think
yeah.
you probably see as well, like there's lots of side hustle pages and stuff on Instagram as well where you can get like inspiration. Like people are even like making an extra like few hundred or £1,000 a month from just like doing things like surveys and stuff. Like you can really make money from like anything, even if it's a small bit extra, it can go a long way. You can invest all that extra money, you know?
Yeah, and I think now in like the AI generation, like you can create like a whole business plan, like side hustle names, like you can literally create a whole business, online business from like nothing in like an hour. You don't
Yeah.
even need like the creative aspects. Like it can all be generated from scratch, which is crazy if you know how to use it. Obviously, like you have to learn a little bit about how to use them like effectively, but like you know, ChatGPT can literally write a detailed business plan in like 5 seconds, which is kind of mind blowing.
Yeah, honestly, like all of that has completely changed. There's not really any excuse for not trying something nowadays when you have that sort of technology at being able to use something like that. It just changes everything really. Even I think I would hope that like the younger generation though are like trying to use it in like a productive way. I don't know. I feel like there's probably a lot of fun to be taken out of it as well. But like, yeah, you're completely right. Like even my girlfriend, she has her own agency, but she is kind of trying to do something that she's a bit more passionate about. And like within like 2 hours, ChatGPT had written her business plans, investor pitch decks, email marketing, solutions, like pretty much everything that you would need to get started, you know?
Hmm. Yeah. What do you think? So, for those maybe who have kind of once you've got your finances on track and you've been able to put a little bit of money away, when it comes to a beginner who wants to start investing, what's the very like basic things that they need to know about to be able to like diversify and like understanding what they're investing in? What like the key things they need to know about?
Yeah, well, like I think we obviously touched on like goals at first, right? Like what I usually start with people, like if they have no idea what they want to invest in or what like kind of risk tolerance they have, if they have no investments, I'll always start with like their goals because generally if you know what you are trying to get to or what you're investing for, that'll influence like what you actually invest in. And then usually once they have kind of all the foundations of personal finance and everything sorted, I'll probably get them to do some sort of risk tolerance quiz or just ask them some questions to kind of see like what the idea of actually like losing money is to them or how they feel about that. Because like one thing is if if you're going to invest in something and there's a potentiality of you losing money and that like scares you or stresses you out, or is going to keep you up at night, like there's then that's just not for you. You know, there's other things out there that are probably a lot safer and will make a lot more sense. And what I generally tell people, and like not everyone probably agrees, because like even if you're young, like you can definitely afford like more risk when you're young for the most part, depending on your situation. But I tell everyone to like start with like the basic, less risky investments that make sense to them, and then kind of like build out a bit of a foundation of like safer, longer term investments that they can just like hold long term and not have to worry about, sort of thing. And you can kind of build your way up from there and start learning about different things that are a bit higher risk. So like for example, um like you've heard me probably talk about like the gold coins. I consider that to be like really safe. It makes sense to a lot of people, and it's just like something that you purchase and you hold for several years. So that's a bit of a unique instance. Like not everyone knows about that, but that's something that I usually get people to start with if they're interested in starting because it makes sense to them. Like invest in things initially that make sense to you. It doesn't really make sense to go investing in something that someone's told you is going to make loads of money if you don't understand the basic concept of it. Like I think in terms of things that people should know, like figure out what it is you do know about investing and what makes sense to you. And so long as you feel that it's comfortable or it makes sense with your risk tolerance, then start with that. Or even if it's just the learning side of it, you know, there's always people like me or you that are willing to help and that will are pretty available online to learn from, you know. So if you don't know where to start, that's a good place. Is probably invest in your mindset or yourself.
Yeah, I think I see a lot of like younger people my age. Maybe they put their first few hundred into this like a few stocks which they've seen, and then they see the price dip maybe like 5%, 10%, and they think, oh, let me get out of this. Like, what a like waste of money. Like, they expect like to see it just go up in a straight line. I think if you're not educated on like the fact that investments are for the long term, like 5, 10, 15 year time horizon, then there's no point putting your money in if you're going to check it every day and like watch it closely because you're inevitably going to invest on your emotions rather than on like sticking to your long term plan. So I think that's one thing I see a lot.
Yeah, 100%. Like, and that's to be honest with you, like when I first started out and I was kind of helping people, like people wanted to do like one call with me and me tell them like things to invest in, you know, and it didn't make any sense. Like I wasn't comfortable doing that because I know that this person doesn't really know what they're doing. Like for me to just put them onto random investments with and them have no like prior knowledge or know how to like actually like manage that investment for the next 5, 10 years. It just didn't make any sense. So now I don't really do that anymore. I'd much rather like explain to someone the whole way through from top to bottom and make sure that they understand how and why they're investing in everything that they are. And also, like, just on the point that you made there, I also see that a lot where, someone will just pick a random stock that's big at the moment or a random cryptocurrency that they think is going to do well. And then once it drops, they pull out. And like, that's probably the worst thing they can do because they're just affirming a loss that didn't necessarily need to happen, but you don't even know because you didn't do any research. Like, if you haven't got a clue or you really just don't know where to start, like, genuinely, like, an index fund, a simple index fund is a easy way to start for a lot of people. Like, even if it's not where you stick long term, at least it will kind of give you an idea of how investing works. It's relatively safe for the most part, so long as you pick like something that is quite safe. And yeah, it'll just give you exposure to investing. You don't even need to know much about price. You can just dollar cost average to start with. I think it's a
Mm.
good place for most people, to be honest, because they can get exposure to the market, kind of learn those basics if they don't know already. Um, and yeah, they're
Well,
probably not subject to big losses either.
yeah, yeah. I think are you diversified across like obviously you're in gold. Do you have any other asset classes like do you hold any crypto for like the long term?
So, like, firstly, just with the gold, like, I don't invest in gold really. It's only the coins, and it's like the reason I'm just saying that is I don't want anyone to get the wrong idea. But like, and like the coins specifically, they just have loads of other reasons as to why they're valuable. So the price doesn't like fluctuate nearly as much as like just gold spot price. In terms of like other areas, like, yeah, I'm naturally in the stock market. I'm invested mostly in index funds myself, even. And that's because honestly, I just don't have the time or patience to be like checking regular earnings for various individual companies and the various price points. I do invest a little bit in individual stocks, but mostly index funds just for sake of it being easy and passive. Um, Property, I invest in property, but only like true at the moment, only through like peer-to-peer loans, basically. Um, Not necessarily something for everyone. I just have a few partnerships that have served me really well over the years, where essentially I just, as if I'm the bank, I loan certain people money for set periods of time for set interest rates. Um, Bit of an unusual one, but to be honest, it's completely passive. I don't actually do anything. Um, and it just makes sure that like I'm at least beating inflation by like 10%, like I'm probably getting like a 10% in like a 6 months rather than losing 10% over the year kind of thing on my money. Other commodities, crypto you mentioned. I do invest in crypto as well, and like I think most people should, but like that's the sort of riskier stuff that I only come to with clients who have already got like an investment portfolio in it and they want to like invest in a little bit or have a little bit of play money in something a little bit more risky that might get those good returns. And yeah, to be honest, I'm not like a trader or anything, so I will literally buy at a certain price point for whatever crypto that I'm interested in and then hold that long term for the most part. What about you?
Just yeah, stocks and crypto, but I think I've got a physical gold and silver coin which I bought, but to be honest, like I didn't do a lot of research into buying like the specific coin. I went on Royal Mint and kind of bought a bullion coin, which was like the first one that was recommended on the website.
Mhm.
I don't know if like how you would go about choosing a coin, like and obviously it's quite new to me, like which coins have more of a like value. Is it because of they're more rare? Is it because of the quality of the like the purity of the gold or silver, or how would that how would you recommend people kind of if they were going to buy a gold coin? Is there, you know, how much research you need to go into to kind of get the maximum returns?
Yeah, so that's a good question to be fair. So like there is a lot of reasons why they're valuable, like different reasons. So like you mentioned a few of them. Like the gold content is probably like the most basic element of it, but generally the prices amongst the coins won't vary massively unless it's like a £10 coin that's quite big. The gold content is naturally going to be more than like a smaller £1 coin or something. So that's an element. The rarity is probably one of the bigger things. So obviously with gold, there's only a certain amount of it in the world, so it's technically rare anyway. But these coins, the like certain ones are only made in certain amounts. So naturally, the less of them that there is, the generally the greater the value. And then there's also like a lot of the time, and it depends. Like, so you mentioned yours was bullion, so like a lot of the time those won't have like a mint condition like rating or anything. It will just be like mostly from that the gold content is the value, whereas the ones that I invest in generally they're like graded by like a certification NGC, and that gives them like almost like a collector's item. It gives them like a value, a mint condition value. So then there's obviously only a certain amount of those that are available in the world. So and they'll generally be bought by like collectors or old rich white people at some point, and that's kind of where their value comes from. And then also there's like the historical element. So naturally coins are minted for specific occasions. So like there's be the Queen's Jubilee, Charles's like coronation, things like that. There's specific coins minted for those occasions, and like people, not necessarily me. Like I'm an investor, I'm not like a coin collector. So like people see value in that long term. Even like I was mostly telling people to buy them prior to Elizabeth's passing because I knew that like same as anything that they were going to be effectively like discontinued from that point. They were going to stop making coins with her face on them, so like the value increased. Like every one of my clients that bought a coin with her face on it before that point, like automatically did some increases. Um, but even if you keep in mind, like they're not making coins with her face anymore, so like they're only going to get more and more rare. So like it's not like a case of you've missed a boat really. Like they're just going to keep getting more and more rare. And that's a big part of it. There's also certain coins are tax free in terms of capital gains tax. So that's a big element, especially nowadays, because the government is cutting those allowances massively. And yeah, if you want to get like a valuation or anything on the ones that you have, like just reach out to me. I'll connect you with my broker. But for someone who's just starting out, like honestly, you're not going to have much of an idea really, and it would take a lot of research. Like honestly, what I recommend is speak to an expert. So like my broker, for example, he works at a company in London, and they've been like in this business for however many years, and the way that their business model works is they take profit when they sell a coin back to you, or sorry, they take profit when they buy a coin back from you. So if they sell you a coin as an investment, they only take their profit when you sell it back to them like 3 or 4 years later. So they want you to profit as much as possible in the meantime. So
Hmm.
like generally they'll only actually like recommend a coin that like makes sense for you as an investment basically. And they'll also like they're very good in that like if you are intending on investing in a coin, they'll spend time like educating you on exactly why this coin is valuable, why it's a good investment, why it makes sense for you right now, kind of thing. So that's like, and he does free consultations for people that are interested. So like, that's probably where I'd recommend people to go is like speak to someone that knows more than you.
Yeah, what would you say is like in terms of like the lowest amount of money you need to put in for it to be worth it, and what are the kind of typical returns that you could expect? Like over like a year, for example, like it in a rough range?
Yeah, that's a really good question as well. So like, to be honest, in terms of like, you mentioned you bought one, right? Like, if like for the most part, I would imagine I'd have to see the type of coin you bought, but for the most part, the value of that is going to rise and fall with the price of gold, right? Whereas if you want to buy one of the commemorative coins that has all these extra reasons for being valuable, and that is what I recommend, then you're probably looking at like 2 to 3K at the minimum. Um, and in terms of returns, it varies because like a lot of the time, the more that you spend on a coin, the better return rate it will have because it's just more rare from the moment you buy it, kind of thing. You've spent more money, so you've purchased like a better commodity essentially. But even still, like over the last 2 3 years, they've kind of averaged out at like a percent per month in increase, so not too bad for gold, really.
Yeah,
Um,
yeah, that's quite a good return. I think the one I bought was only like a £350 coin, but since I think the price of gold has gone up quite a bit in the past 3 years, I think. Well, I'd say quite a bit, but maybe I think it's been up about 15% or so.
oh, but
Um,
you bought it like 3 years ago?
yeah, yeah.
Okay, yeah. Well, in that case, you're gonna have done quite well because yeah, the price of gold is probably almost like all-time highs at the moment. Um, so like naturally, you're gonna have benefited from the price of the gold increase. But to be fair, just for context, like the ones that I bought um around this time last year, they've probably all increased minimum like 15% as well in the space of a year. Somewhat due to Lizzie, but also just a combination of other things.
Mm, yeah. So, if you would you say like for someone to get into like commemorative coins, you would need to have quite a big net worth then, uh, or like 10k plus, because you want to be diversified as well into other things.
Yeah, so I mean ideally to be fair, like what I generally tell people is like regardless of like I really like it as an investment. I think it's like a really good option for a lot of people. It's safe. It's like technically it's outside the financial system. There's just like and it's a physical object, so older people kind of it makes sense to them as well. Um, but I still kind of recommend like max 6 to 10% of your overall net worth. So yeah, ideally you would have more money available, but there's also there is the side of it that like at some point with investing you have to start somewhere. You can't necessarily like diversify from the very first moment. Um, what I tell people is maybe once they have their full emergency fund set up and they've started like maybe the bones of something else, whether it be like an ISA or something like that. Um, it's slightly controversial, but I do tell a lot of people that they could consider putting like, depending on the side of their emergency fund, they could consider putting some of it into a gold coin. Now, bear with me because I'm not, I don't normally tell people to invest their emergency funds. Um, but basically, like I make sure first of all that they have enough cash available for whatever happens. But also it's more just to like counteract inflation somewhat, and also like honestly in the 3 4 years I've been investing in this, like it's never gone down in value. Even when the price of gold drops, the coins they just don't really like they're not really hit like that because they have loads of other reasons why they're valuable. Not to say that they can't lose money. That's why you obviously need to have some cash on hand regardless. But even like generally worst case now, if you have a big emergency and you need to cash it in, like my broker, like even if you just ring him, he'll and you don't send him the coin straight away, like he'll release the funds to your bank account like if you need them for whatever value it is at that point. And like I've had people where they've needed to cash it out almost like very quickly after buying it, which is like not the intended purpose because you're not looking to cash out your investments beyond your investment time frame. But seeing as they had to like, and they it might have been a month later and they still even made like profit, you know. So slightly controversial opinion, but it's always worked out, to be honest.
Hmm. Yeah, is it quite easy to make a like transaction in terms of like getting it sold? Is it Are you keeping them in like are you having the physical coin like with you, or is it kind of safely kept with the company itself that is like managing it?
Yeah, so that's a good question. And also, like, to be fair, first of all, like, I wouldn't tell just any random person to do what I just said and like buy a random coin from any website or anything because that may not be nearly as like liquid, basically. You might not be able to cash that in because I don't know where you're getting it from. And they might not like you might not be able to sell it that easily, or you might have to sell it at like a loss or something. It's only when you work with my broker because I know how it works that I would recommend that. But um, what was I gonna say? Yeah, so oh yeah. So in terms of like storing and everything, like generally you like most people they'll end up keeping it at home or somewhere that they kind of feel is safe of their own. Um, Reason being, like you can store it in a Brinks vault in London via the company, but you're kind of looking at like £10 a month just to have that. So unless your net worth is pretty serious or you have a whole bunch of other valuables or something, then you are just kind of eating away at any potential profits by doing that. So I definitely tell people like, okay, look, this is like a pretty valuable small item that you're going to be investing in. Like you do need to make sure that you're storing it somewhere safe. Um, but yeah, that's an interesting one. As I said though, regardless if you didn't have it on hand or it was stored somewhere, the broker will, or my broker anyway, will pay you out if you need the money on the basis that you will obviously return the coin at some point. You know.
Mm, yeah. Do you have any unpopular or controversial money opinions or finance opinions? I think, yeah.
Uh, to be fair, like honestly, like for the most part, like you are better off sticking with what like a lot of people will tell you, and like I don't go against most financial norms. One thing I'd say is if you're going to go different to what other people are saying, then you need to kind of make sure that that you're doing the right stuff. So like with the gold coin, for example, like it's a bit unusual, but like it's worked so well for me, and it's literally worked for every single person that I've put onto it. So like at least if you're doing something different, make sure you're doing it right, ideally. Um, in terms of like controversial financial opinions, I even actually just put out a reel yesterday, and it got a little bit of like hate from some trolls on TikTok. But basically, all I said was that I don't like the hook. The hook was a little bit controversial. I just said I don't think that you should just blatantly listen to advice that everyone should have a 3 to 6 month emergency fund. But then I followed it up by explaining that like I recommend you use a formula that I have where which takes into consideration like well first of all everyone gets a month of worth of expenses at the very minimum, and then depending on if you have any dependents, your incomes, so like if you have multiple income streams, and also the likelihood you are to lose your job or what industry you have a job in. So like, but if you go through the formula, you'll see that everyone has minimum 4 months emergency fund regardless. So like, it's not really that controversial. It just lets people know that like if you need more than the 6 months, like it will tell you if you have like three dependents and you have one income, and your industry is like a dying industry, then you should have like it just tells you should have a lot more than the 6 months, sort of thing. But like people don't in social media, people don't always like listen to everything you
Mm.
say. Like they took my initial statement of I don't agree I don't agree with this like blanket it's blanket financial advice is saying 3 to 6 months for any human, It
Yeah.
doesn't consider any of the person's like situation. So like that's maybe controversial, I guess. Other than that, not really, I'd say.
Yeah, I think that's fair enough. For like for me, for example, like I don't have any dependents and I have very low overheads. So like I think 6 months emergency fund would be like too much almost because of inflation eating away. I'd rather invest it. Obviously, I had a very stable job, and it was my choice to leave my job because I knew that I could like survive uh, comfortably anyway. So I think that's a reasonable point. But yeah, like you say, like social media, um, especially when you have like a post which reaches like in the thousands of people, then you always get like the comment of like someone who's not actually watched the full thing.
Yeah, yeah. Well, like, there's people. I think the quote is something like, people that'll hate on you, they're never hating from like above. It's never going to be someone that's like in a better position than you. That's commenting something negative on your social media. It's always someone that's I don't know hasn't paid attention or is just jealous or something anyway. But I think if you like you mentioned obviously that like social media has ended up being like an income stream for you essentially. I think if you like, I'm all for that, especially nowadays. Like even if you do like a 9 to 5, like making content of some sort, even if it's just something you're passionate about, can lead to like crazy like exponential growth. Like it can be a really really profitable thing. Uh, but I do think you need to have a little bit of a hard skin, regardless of what you're kind of talking about, because people are gonna comment even if you're trying to do like only good things for people.
Mm, yeah, yeah, 100% agree. Yeah, I've had posts which have gone like super viral and like a lot of comments, DMs of people who maybe taken the wrong way, or they just don't like to see other people like talking about money. I think money is still like a stigma of like personal finance shouldn't be spoken about. But I think as a creator, like I'm always trying to help spread awareness and education rather than like I've never had the intention of like showing off or anything. But obviously, people think that money is a bit of a sensitive subject.
Yeah, well, like that is something that I go into a little bit as well. Is like I think a lot of people do have like childhood subconscious like programming when it comes to money. Like if you're told from like a really young age only things like, oh, money doesn't grow on trees, like, don't we don't have enough money for this sort of thing, like you can develop like almost like that like scarcity or like poverty like mindset basically. And then you see people like rich people online and stuff and they're showing off their money, and you think money is like evil. It's like it's not, like you're never gonna like use it in the right way or like benefit from it with that sort of mindset, I think. And a lot of the time those are the people that will comment something negative under something that's like intended to even help people. It doesn't really make sense, but that's just a part of like the social media world, I think, really.
Yeah, yeah, 100%. Um, where can people find you online, and what are kind of some of the services and things you help people with online and with your kind of you have a Patreon and you have a people are able to book calls with you? Is that right?
Yeah, so to be honest, you can find me on any social media really. um Instagram, Twitter, LinkedIn. Pretty much available on everything, and I try and like spread um like my free content is always there, and like if you're only starting out or what, or if you're a bit further along, you never know, it might help to some degree. And then yeah, so like I have my Patreon membership. Um, that's just like a monthly subscription. I've been uploading podcasts and articles on there for like over a year now. And with the membership, you also get like a monthly call with myself. Um, and then I also like do like basically a wealth program, but that's kind of more like, to be honest with you, like the Patreon is there to help people like get their foundations going, start building up that money and start investing. And then like for higher income earners, that's where I kind of do like my wealth program where I help people like properly manage their money and help them build like diversified portfolios basically. But that's like utilizing a lot of my like experience of wealth management stuff. So like it's kind of for like, well, it's for people, anyone really who has as little as 10K in savings. I'll like speak to them about the wealth program if they're interested. But I do recommend people probably start with the Patreon if you're not like familiar to investing or you're just starting out.
Yeah, yeah, great. I think we've gone over an hour, so I think we can start to wrap up. But yeah, I think we've covered a few things that will be helpful for people.
Yeah, definitely. I think there was a lot of stuff covered there, to be honest. That hour went quickly, but thanks for having me on anyway. I appreciate it, and I love what you're doing with your page as well. Like you mentioned about trying to help people, but like there's definitely some good stuff on there. So hope it continues to grow in the way it's been going.
No, yeah, thank you. Appreciate it.